Welcome to Private Lending Insights. I'm your host, Rocky Butani. In this episode, I interviewed Anthony Geraci from Geraci LLP, also known as Geraci Law Firm. Anthony has built an amazing law firm to serve private lending companies over the past 15 plus years. And they've hosted a lot of conferences, made a lot of connections for people in the industry, including for myself. And in June 2025, Anthony has split from the company that he built. That law firm is now called Foreclosure Law, and Anthony's starting his own law firm from the ground up, which is still called Geraci Law Firm or Geraci LLP. And he has a new vision for his firm that is going to still remain focused on private lending. Anthony Geraci is a true visionary in our space. He formed the American Association of Private Lenders. It was his idea to start the conference for AAPL. He then started his own conference series for his own law firm back in 2017. And he has a lot of knowledge about what's happening in the private lending industry. We talked about the story behind his new firm and the split from his old firm. We talked about his thoughts on the market, on trends that he's seen. We talked about his history with the AAPL and a little bit of his history of him starting in the business and what he's accomplished over the years. We also talked about a couple of new business ventures that he started. Anthony's a true entrepreneur. He's very good at starting companies, building them. He's very good at delegating. So he loves to hire people and start these companies wherever he sees an opportunity. So we touched on those two. Many of you who've attended Geraci's conferences over the last several years have gotten to know the law firm's partners quite well. And Anthony's hasn't been one that's been out there as much as some of the other attorneys from his previous firm. So you may not know much about him, but he's a good guy. I've known him since the first AAPL conference I attended in 2013. At the time, I didn't realize that he had started it. I thought maybe he was just a speaker on stage and he was just pitching his legal services, but he's been a true visionary and helped a lot of people grow in our industry. I hope you find this episode to be insightful. Let's get started. Here's my interview with Anthony Geraci. All right, Anthony, thanks for joining me for Private Lending Insights. It's great to talk to you. How's everything with you and all your business ventures?
Everything's great. No, thanks for having me, Rocky. Excited to be here and talk with you. I mean, I know we've talked for years in the industry, but excited to be on the podcast. So it'll be fun.
Absolutely. So let's start off by talking about what's happening with your law firm and you splitting from the law firm that you started. If you could just tell us the story behind that.
Yeah, it's something, my love of private lending has been, been my entire career for the last 2 decades. And as we moved, more and more toward, if you will, 2020, 2025, I mean, it's amazing how things have changed, right, in the industry from, if you will, balance sheet lenders to, if you will, Wall Street coming in, securitizing everything, and so many exciting changes that happened. Yeah, as part of that, my firm became bigger, and we had a lot more partners, and sometimes we didn't see eye to eye, right? And I think that what that came down to is I saw going one way, and my partner saw another way, and what I thought was best way for us is I didn't see a path forward with them, especially as we'll go into my other business ventures as well. To me, I see my other business ventures actually as complementing the space, not necessarily distracting from it. And I think as we talk more, you'll kind of see my vision for it overall. And so my vision just became something that just wasn't part of where they were headed. So, off to creating/recreating Geraci LLP 2.0.
So the firm that you built over the years, it's now rebranded to Fortra, and then you're continuing your law firm under your last name, of course, which is Geraci LLP or Geraci Law Firm, right?
You got it. Yep.
Okay.
Yeah, you can't have Geraci without Anthony Geraci.
Exactly. Yeah, makes sense. And so are you offering the same legal services as the previous company?
I am, yeah. So keep in mind, I started the all the divisions, right? So banking and finance, corporate and securities. I mean, I've done hundreds of funds. I've done don't know, hundreds of loan documents, catalyst for 50 state lending, licensing, all that above is like, we'll do the same services as well. But I would say our niche, if you will, is really that high level strategic advice. That's something that was hallmark of my experience for the past 2 decades. I've been very fortunate to work with some of what are now the biggest players in the space, guiding them from their humble beginnings up to billion-dollar companies now, and it's just exciting to see where they're headed. And I want to continue that. I don't know how you feel, Rocky, but I truly, truly believe we're just at the beginning of what I think the next 10 years will be for private lending, the huge expansion that's going to come, and I think the contributions I can continue to make to the space.
Yeah, agreed. I got to a point where I thought, how is this space going to grow even more? How is it possible? How are there that many real estate investors and that many deals out there to be funded? The volume just keeps growing and growing and doubling and tripling. So yeah, I think there's still a lot of room to grow. And as long as there's real estate transactions, especially in the residential sector, I think there's still going to be continued growth in private lending.
100%. And I think what you're seeing is people niche out in different areas, right? So a lot of my clients now, even we're talking about construction loans and how they're going to add value to that, and really trying to figure out different products. I mean, this is kind of nascent to me of, if you will, 2004 to 2006, right before the subprime crash, if you will. You had a lot of different products, and I will say exotic products, if you will, in that time frame. I'm not saying, of course, I'm not alluding to a 2007 crash, if you will. I'm just saying you have a lot of creativity in the space right now. And you're seeing, if you will, kind of the bloody nose that the commercial space, at least the Class A buildings, are getting right now, just devaluing significantly as people, you've got this competition of return to work versus hybrid work environments. And I think what we're all stand on that one. And as a result, just lack of office space needed. And you're seeing a lot of Class A buildings just getting demolished as far as values in LA, and I would say other super regional areas. We're going to see that continue for the next few years as well.
Yeah, and I've seen a bunch of private lenders that were 100% focused on commercial real estate, and they're pulling back, scaling back, pausing, or making the switch to residential because that space has just got decimated. Not only office, but multifamilies, which was the darling asset class for so many years, has just not crashed, but it's taken a real big hit.
Absolutely. I mean, you kind of see this as like, this is kind of the understory that I don't think you hear a lot of, which is technology has allowed all of us to relocate to where do you want to be today? And I say today, doesn't mean you have to be here forever, right? You could rent a house in Thailand for a month, and you could be in Italy for the next month with the same access to internet, technology, and sophistication as you would here in the United States. At any time in history, have you ever had that ability to do so, to work for literally from anywhere? And as you see these return to office stuff, which may or may not be accelerating with popularity, but I would think for private lenders is we could literally work anywhere. As you see, me and you, we're in two different places right now doing this podcast, and I don't think that's a fad. I think that's going to continue. And as that continues for other people, what does that mean for multifamily? What does that mean for commercial? If you don't need to stay in one place anymore, do you really have, if you will, the demands on real estate that you once did?
Sure, absolutely. And so your new firm that you started, are you going to stay 100% focused on private mortgage lending, or do you have plans to branch out into other lending sectors?
No, I think there's so much to do in this space. I plan on staying in the private lending space. Now, will I stay just in the real estate private lending space? I don't know. As you know, I found another company called Stratus Financial, and we do student loans to pilots. I would say anything in the financing stage, for I would say alternative lending space, is fair game for our firm, right? We've become experts now in student loans, if you will, through me, and just other interesting asset classes. There is so much activity, as you're probably seeing, in equipment financing and all kinds of other space. So I think we could branch out into that, but for sure we will stay. The forefront of us is going to be private lending, non-bank lending, with of course the core likely still be real estate. But I wouldn't see. I'd see us being other avenues such as student lending or equipment financing as well.
Within the legal services of private lending, there's a few large firms that service most of the lenders. How do you see the competitive landscape in private lending in terms of legal services?
Question always comes down to what I have to ask myself is like, what additional value do I add to people, right? What can my firm or whatever I can do in the space? What value can I add to them? And at my core, I've always been a connector in the space. I think I founded AAPL. I founded the conference lines that was Geraci conference lines, and of course, I'll found another line. But I've always loved connecting people in the space. Like if I can get you in the room with people you want to know, and you get business as a result, that's always one gratified me, right? Is I'm happy to make that relationship happen, and then second is I know you'll think kindly of me, and my businesses will grow as a result. So I always say that I'm selfishly selfless in that sense. It's like that's my goal is to connect everybody in the room. So funny enough, while my vision is the same and my offering is the same, it's just I think my execution will be exactly the same, but my goal is always to be where does private lending need to go, and what problems do I need to solve for people, and then how do I get those people in that room?
And earlier, you I can't remember the term you used. You said strategic. Was it advisory? Was something you said that you specialize in? So that's what I took from that is that high level. If a private lender is trying to figure out their strategy, you can consult them on that. You can advise them on that.
Absolutely, yeah. So you don't just get a lawyer who's been doing private lending for 20 years, although I've been doing that as well. Under Stratus, I've created 3 funds. I've ran 3 funds with warehouse lines, equity capital, and created, if you will, the market in that space. So what can I take from that world and continue to add to private lending? I believe, as I said, kind of what we were touching on, we're just at our infancy. I truly believe my skill set will be strategically advising, if you will, smaller players, if you will, now that are really starting their careers and grow them the next 10 or 15 years to be, the giants of our world today.
And is this something that you've done over the years with lenders that started small and grew to be a much larger national lending shop?
Yeah, it's funny. I think also I launched a podcast, Rocky. You're about to. That's just coming out literally today. Funny enough, and you'll see it out there. So I was grateful to have Ben Fertig on my show, and we were just talking about the times we were working together when he was Jordan Capital. That's a blast from the past name that probably most people don't know. That was his foray into private lending, and then it became Constructive Capital, and I think everybody recognizes one of the giants in the space. I've worked, as I said, blessed to work with a lot of players in this space, and seeing what they do from the beginning and then grow from there. People like Steve Pollock and Anchor Loans. It's been gratifying to see how they've taken it to now, and then of course with Ray running Anchor and seeing what she will do with it going forward. It's amazing to see where they all started, where they're going. And I definitely don't want to take any credit from them, right? These people have taken the space, got the warehouse lines, talked with Wall Street, and really convinced them to do so. Funny enough, one of the players that you don't hear about too much that I give a lot of credit for is I don't know if you remember Aleem Qasim and Brian O'Shaughnessy from
Yes,
Athos and Rama Fund.
absolutely.
Those guys in 2010, Aleem did a lot for making Wall Street aware of this playground, if you will, of private lending. And in 2010, that's where the seeds were coming in. And then, of course, you got Beth and Ben coming up in 2013, 2014, just taking the world by storm. So it was awesome to see.
Yeah, I remember the first and second APL conferences I attended, 2013, 2014. Athos, Rama, or I guess it was more Rama was prominent because they were trying to raise capital. I remember seeing them at your conferences, and that was fascinating, and they've had their own journey in the space, but there's been a lot of these giants, if you will, that have been in your orbit.
Yeah, and I think we're just starting. I really, really do. I think there's going to be a new norm. You've got people. When you and I were coming in the space, right? It was very regional. Private lending. They maybe they'd be in California, maybe expand to Arizona or Nevada, and that's it. They'd stay very regional. Or some people in the Northeast and stay very regional. I mean, today everybody and constant demands that I get is 50 state lending. What licensing do I need to be in all 50 states? And it's not just hey, let me get licensed in one. Okay, let's get licensed in all 50 right now. That used to be a rarity, and it's soon to be the norm. As a lot of these players, either get correspondence or really trying to securitize their book. And a lot of good work that, of course, Beth and John Beecham have done from Torac, just getting awareness to Wall Street of the private lending space, make it easier for everyone to securitize.
And there's tons of capital out there now, but it seems like a lot of lenders are struggling to get deals. Even though lenders expand into other states, there's already competition in those states. How do you see that playing out? Is there going to be enough deals to be had for all the new lenders and all the existing lenders that are expanding into lots of other states?
I think so, and I think we don't talk about it much, but I think you're going to see, if you will, this divide, and something that I want to address in my conference line. You're going to see, I'll call it divide. I'll just call it artificial divide though, between securitizers and balance sheet lenders, right? And they have two different goals. Your securitizers, they're trying to aggregate a lot of RTLs and a lot of different loans and get those up to Wall Street and sell them, make them all look the same and sell them to Wall Street. Then you got your balance sheet lenders who are looking at deals completely differently. They're not looking for the exit in mind. They're looking, hey, this looks interesting. I can make this deal. Sure, it's not a one size fits all. It's going to be a lot more work and probably cost a lot more than, say, an RTL loan will, but it's just as much a good deal as an RTL would be. And your balance sheet lenders are going to do those deals every day. So I think every deal is going to find a home, and every home is going to be different. And I think there's going to be a lot more deal flow. The next thing I think we need to do also is just get more awareness, if you will, to private lending space. Train up the next side of brokers and really get them involved in. Hey, you don't have to just sit on this. Banks don't have to do this deal, as banks are getting more and more restrictive on their capital. I see non-bank lending or alternative credit just taking the world by storm. You hear a lot about private credit and how if you Wall Street's trying to get money into the space because it's a safe alternative in a volatile world.
Absolutely. I've heard of a lot of builders that I didn't realize there were that many builders out there that use banks instead of private lending, and it seems like a lot of them have been making that shift over, getting away from banks just because the banks can't really serve them anymore, and they've come to private lending. So they're paying a little more in the rates and fees, but they're probably getting faster service, and it's probably made life easier for them.
You got it. And the spreads have never been closer, right? I mean, we're talking about, especially bank lending, maybe they're at 6 or 7%, and you've got, private lending starting at 9. I mean, you've got 200 bips as a spread between bank and non-bank lending. That's a very thin spread, right? And 2%, especially if you have the exit in mind, like if you're flipping it or rehabbing it, or whatever you plan on doing, it may make more sense to close with a private lender than it is going through the bank and the rigmarole and the hoops you have to jump through in the banks.
Yeah. And what are your thoughts on DSCR loans? The it seems like they haven't slowed down. Well, they've slowed down definitely since 21, 22, but the rates are high. There's still a ton of DSCR loans closing. Where do you see that heading in the future?
I still see that as more competitive, right? I don't see that. I mean, it slowed down a little bit due to the market concerns, but I still think that, I mean, you have, if you will, the non-QM players playing in the DSCR space now, right? So they're adding that as a feature of non-QMs, and some old players, if you will, coming up with new ideas within that. So I see that continuing. I don't see a slowdown, like a stop, if you will. Like the slowdown is going to happen as a result of the market, but you still have creative people in the space trying to find alternative places to put the DSCR loans. And if they can sell it for 50 or 100 bits cheaper, then they'll gain more market share as a result.
And I don't know a whole lot about the secondary market for DSCR loans. That's something that I've never known who those players are that are buying all of those loans. But it seems like they've been around doing securitizations for DSCR more than the bridge loans. Are they just a different type of investor than let's say the ones that are securitizing the bridge loans, the RTL?
Yeah, your securitizers are generally going to be Wall Street, right? So people who want to buy them up, I mean, you've got hedge funds and everything to use them as a fixed income as against a hedge for their riskier deals, if you will. The people who are buying DSCRs, and if you can get them, actually is more like insurance companies. You've got insurance companies really coming in. They're looking at it differently. They're not trying to find this huge yield. They're trying to just get enough yield to pay their premiums. So they're willing to accept a cheaper coupon if you can show them a safer return, right? So if you can get the DSCR higher, or if you can get the LTVs lower, I think you'd find real buyers in insurance companies, and they're not trying to get the maximum yield possible. They're trying to get a safe return to pay their premiums that they charge. And so which you look for different business models, and that's a different exit for lenders as a result.
And as far as you know, is the DSCR loan that are purchased by insurance companies, is that really populated through the insurance industry, or do you think there's a lot of insurance companies out there that just haven't really touch this investment opportunity?
Both, right? So your bigger insurance companies, of course, know it, love it, are buying it right now. I think you're going to see kind of what we're also seeing in the warehousing space. You're going to see regional insurance companies or smaller insurance companies look to pad their book, kind of like the bigger insurance companies are with DSCR paper. Much like you're seeing right now as warehouse lines, you're seeing regional banks come and, hey, I'll throw you $10 or $50 million in a warehouse line because I've just seen how easy it is for these bigger banks. They've taken the risk and built that engine already. It's like, how do I copy and paste that? And you see that's when things start getting, if you will, a little hot and heavier, when you can almost do a copy and paste model of the bigger players on a regional level.
Sure, makes sense. And what are your thoughts on where we're headed with commercial real estate in the next 18 months or so? Do you think that's going to make a comeback in any big way?
I don't think so. I think we're still chasing the bottom of that. I think you're seeing a lot of media right now, and again, don't want to call myself a conspiracy theorist, but at the same time, you have to take a look at who's mandating a return to work environment, right? And who's mandating the return to office and railing against this remote environment. I'm not a proponent either of a fully remote environment, although I love fully remote. But there's also a hybrid that can happen, right? You can have people remote, you can have people in office, and you have both. I think it's how you structure the environment more than anything that matters more than where they're located. But the people who care about location are the people in the office buildings, right? They can't fill the office buildings if we don't have people going to the office. And so you still see huge vacancies, I think, within even people who are leasing. And you have a lot of tenants asking themselves, do I really need this amount of space? So they're either one, going to go to the Class A office building and say, I need less space, or even more drastically, hey, why don't I go get that office condo or smaller space, either buy it or just rent lesser, get a lower triple net lease that they don't need it, and or just co-locate like they do with WeWork and something like that. There's a lack of drive for space, and again, until that changes, I don't think the office environment changes. I mean, you always have a place for the smaller office condos, but Class A buildings, that's why you're seeing right now a lot of these people trying to figure out how to convert these into condos. And of course, that brings its own set of problems because the plumbing is just not there in Class A buildings to be residential. So I to answer your question, I don't think we're seeing the bottom anytime soon. I think you'll still see a race to the bottom for the next couple of years.
And do you see a lot of private lenders that have been focused on commercial real estate, small balance sheet bridge loans? Small balance bridge loans? Do they seem to be sticking with commercial real estate, or do you see a shift from those firms to getting into residential properties?
Yeah, I definitely seen a shift. I mean, there'll be always a home for those smaller commercial buildings, right, or some light industrial buildings. But at least what our bigger lenders in the commercial space, you're really seeing the banks making loans to the Class A buildings right now, and just see if you will, not a lot of alternatives. There can always be one, but the question that every lender has to answer is, what are you going to value it at? Are you going to value it at 80 cents on the dollar, 60, 40, 20? What's the right value? And until I think you get certain on value, I don't know any lender who's going to really be certain about what they're lending on. So I don't see that as something that private lenders are going to just rely on solely. With that said, I haven't seen too many private lenders in the commercial space like lend on huge Class A buildings anyway. Those are going to be your hedge funds and stuff like that, maybe that have a strategic play for them. So.
All right. Do you have any insights on at least some of your clients over the past few years, or let's just say over the past year, in terms of defaults? Have you seen an uptick in defaults, or does that seem to have tapered off?
Yeah, no real uptick. It's been rumored that we're going to see these huge defaults, and it's funny because even in the DSCR world, you're going to see lots of resets, and you thought there'd be huge workouts. And there's some, don't get me wrong, there's definitely workouts being had, but there's not this huge default that was supposed to happen, right? Because this huge reset, or we'd see numerous foreclosures right now, and it's pretty much, there's a slight uptick, don't get me wrong, but there's not this wave of foreclosures that I think everybody was expecting by now.
All right. And with your new firm, are you planning to offer any foreclosure related services?
Yeah, absolutely. Yeah, so we'll foreclose in all 50 states as well. Obviously, we like relationships as well. I'm not going to overnight become a New York trustee per se, but we'll have affiliates that'll be able to happy that. But my goal always has been move everything around service. So how do I service my clients better? So definitely we'll offer that and then find partners that we think can execute on that on a level that we'd be acceptable to.
Okay. And speaking of that, while your firm is just starting out and you've got this list of services that you can offer to private lenders, I mean, how do you implement that? If let's say you get a client that has a need for, let's say, documents and let's say fund formation, you can handle that to a certain extent. Do you just continue to hire, or is that something that you partner with other firms on?
I continue to hire. That's just I'll direct inside, and so I'm talking right now with a couple of people that I think will become either senior associates or associates in the future. When the work is there, we're just in active talks right now. As you know, this is only a couple weeks old since launching, so still very fresh in that. But no, I don't plan on being solo for any stretch of the imagination. We're gonna have associates, and my goal is also have people truly understanding the space, so very experienced associates. People who have cut their teeth, 10, 20 years in the space is definitely at least my first hires. And my goal with my firm is really let's have the depth and breadth of knowledge, that I've always had in the private lending space, and something, you can rely on. People whose advice, they've been around, it's time tested. We've seen a lot of things, and how do we truly advise you on the next steps? And at least for me, I think this can be key, especially as people are starting out and now growing to that next phase. They're really going to need that kind of advice to move forward, and again, need something to rely on so that they can know that they're building a solid foundation in the beginning.
And so the firm that you built over the last 15, 20 years, which is now Fortra Law, it's such a you built an amazing company. It's got, I mean, the people there, the influence that the company has on in private lending, the amount of information that's shared freely, it's and just the culture of the company, the conferences, everyone's grown to love the company, and I'm sure a lot of people are sad to see a split or a breakup, if you will, but how do you compete with such an amazing company that you built? Is it where you just take on smaller clients and then slowly build up another firm that will eventually reach that level?
I'd like to think I was behind a lot of the cultural, exchanges, if you will. So free advice, all that stuff. I trained a lot of those people for where they're at today. So, I wish them nothing but the best. But how I compete with it is really kind of, staying true to those same, if you will, values. Is how do I connect people who they need to know? I'd like to think that my last 4 years in building other companies, that experience will truly add value, especially as I launch a new conference line, bringing players in the space that I don't think anybody has ever seen before. People who have helped behind the scenes, some of our larger lenders, if you will, speak at my conference at least, and really, how do we connect different people with different areas, and understanding that one size doesn't fit all. We're going to have different players, right? If you want to be a broker, we're going to have a space for you. If you want to be a balance sheet lender, we're going to talk about things that balance sheet lenders care about. And then securitizers, right? Which is something, my old firm does, and I'll do very well as well, which is how do we connect those people and make sure that they understand, hey, here's your securitization rules. Here's the people who can raise money for you. How do we make this one-stop shop for you? And so, competition, I think, clients will decide that for themselves. My goal, of course, will be continue to add value, continue to pump out information as I always have, really, show the industry kind of where I've been the last 20 years, and show them where I'm going the next 20 years. And I think clients will make those decisions themselves. Who do you feel confident with can take you to the next level? Do you take somebody who's been doing it and created a lot of these things like AAPL and the conference line in the firm? And hopefully that's of value to people. And if it is, hopefully they call me, and I'm happy to show them the way.
All right. That's great. And as far as the conference goes, so you said you're going to start a new conference line. The conference, the conferences and private lending already seem a bit crowded. What are your plans for the conference in terms of, how many you're going to have, where you're going to host them? Do you have those plans set out yet?
I do, yeah. So yeah, you're probably the first to hear it, right? Because I haven't shown anyone else yet. We don't have a website up yet. First conference will take place in February in Vegas because that's just my playground. I think everybody loves Vegas as well. But it's going to be more of a hybrid. And so my goal is to have brokers, if you will. My goal is to train new brokers in the space, like really get people who have touched the space but are really trying to figure out what private lending is. I would almost go take a throwback to 2002, right? You had a lot of people, at least in the subprime space, right? Not really hard money, but subprime. They're learning how to be brokers. It's hot and heavy. People are learning. We're going to train them how to be brokers as well. So that'd be part one. So I don't expect any private lenders as that part. Really, just training real estate professionals, investors, what have you. Get a room of 200 to 500 people and train them how to be private lenders, and then see who really wants to take it to the next level. Because right after that show will be the next event, which we're actually going to bring the lenders, and I think we'll have a couple of tracks. Right? Are you a balance sheet lender or are you a securitizer? Right? Balance sheet lenders, they're not interested in going to find the next warehouse line. Right? They're not trying to leverage their fund. They're trying to keep on growing and stuff like that. So keep it educational. Truly educational in that space with what are the latest trends and how can you shore up your mortgage fund, for instance, or how can you shore up different loans or thoughts like that. And here's some X's maybe for defaults strategies. And then of course securitizers. Let's talk about capital markets. Let's say where we're going, and add to the conversation, if you will. I will say it'll be the similar conversations, but I'll say with new people who have been in the space for years that you don't hear about, will be at the conference. So I'm excited to have them there.
And you said the brokers are going to be one conference. Do you mean that the lenders would be a separate day, or this is a totally different conference at a different date to separate the
No,
brokers from the
it'll be
lenders?
yeah, it'll be a separate day, but it'll be affiliated. So the first 2 days will be for brokers only, training them how to be brokers. And then the whole idea is to have a crossover, have those brokers who really want to mingle with lenders to come to that lending conference the next day. So it'll be a 4 day event total, but 2 days for brokers, 2 days for lenders.
All right, and focused again on just real estate investment lending, right?
You got it.
Okay.
Yeah, it's hard to merge all those fields because those are two different things. But yeah, I plan to focus just on real estate lending and the conference line for now. But we may add stuff for student lending to the extent that we think we can add value to that conversation.
Okay, sounds good. Let's talk a little bit about APL. Well, actually, let's back up. So you did start APL, but let's talk about how you got started in private lending. I don't normally go into this with my interviews, but in your case, I think it's relevant. So what year did you start out in private lending law, if you will?
2005. So it was my first job out of law school. I worked for Dennis Doss at Doss Law for a couple of years, and kind of learned lending. Of course, gosh, rewind to 2005. Subprime days. It's funny. I can tell stories that probably aren't even relevant today, but those were the days that subprime, was a darling of Wall Street, if you will. And you had New Century, Option One. I know names that have been historically erased, but those are the things I grew up in. And learning about Truth in Lending Act and Reg Z and some of the stuff that I cut my teeth on and created a career out of. Just fond memories of that stuff. So yeah, I started there, and then 2007 launched my own firm for a couple of reasons. Is right, and it's funny. I launched it right during the subprime crisis. Right when 2007 was happening, I decided that was the time to launch a firm. The timing could have been better, but it was also such a great run as well. I still have some amazing stories. I'll rewind it back to 2008, if you will. I don't know if you remember New Century back in the day. So Bob Cole and Ed Gottschall were old clients of mine. And I don't think I've really told this story in public. I just tell it to a few people. And they're supposed to come to my office. Right when I launched the new firm, I was like, Anthony, we're doing it again. We're going to launch New Century again. And so I talked to them, and so I was like, wait, let's whenever you guys are ready, let's talk again. And unfortunately, Ed passed away a couple months later after that meeting. And then I remember talking to Bob. I was like, Bob, what are you going to do? Are you going to start this again, or what do you want to do? I was like, I'm not doing it without Ed. And so, I would say the new Century got shelved as a result of that. But just a reminder of the times that, just how long I've been in the space and how things have changed, but how things have stayed the same as well.
Well, they've definitely changed. I remember first knowing about you or seeing you at my first AAPL conference. And so that was also a long time ago, and that was a totally different landscape at the time. So since I mentioned APL, tell us about that journey. When did you start the American Association of Private Lenders, and how did you get that idea to do that?
Yeah, I'll give you some trivia too. So it was 2008 when it started, and the first name of it was National Hard Money Association. Probably people don't even remember that back in the day, but yeah, it's 2008, and so the idea behind it was everything kind of what we talked about, right? Is the private lending was really fractional. You had California Mortgage Association, which of course is a great organization, still standing today. You have Arizona Private Lending Lenders Association. So each state had it, and I think at that time it really made sense to only be state level because everything you were doing in lending, at least at that time, just affected states. You had Truth in Lending Act, some overarching laws, but it didn't really affect people in the private lending, right? You could easily comply, and then you really had to worry about your state. And then, if you remember right, 2008 came, and we had this lovely act called Dodd-Frank. And Dodd-Frank really changed the landscape in a lot of respects. Still just consumer, but to me, it was kind of the seeds of what was lending going to be like the next 15, 20 years. And looking around, there wasn't an organization that really spoke to on a national level to private lending. And so the National Hard Money Association was created back in 2008. We launched it and actually got about 20 lenders all across the nation. As you can imagine, probably a third of them were California because that's where my base was. And of course, a lot of great lenders back then, but we still got people from Kansas, New York, everything came in. And I still remember the meeting today is like we were halfway through the focus meeting of what should we do, what should this look like, and I was like, yeah, we really don't like hard money lending. I was like, well, what should it be? But we like the term private lender. I was like, okay. I think people understand hard money lending. That's what it's always been. But if you like private lending, let's do it. And so the name was changed after that conference. Our first conference in '08 was changed from National Hard Money Association to American Association of Private Lenders. Funny enough, you start looking at the initials of it, it's AAPL, which is, of course, is the Apple sign, which is now the original logo of AAPL was an apple, red and white with a little apple, and I think it was changed to get rid of the leaf at least to make it look more of a circle because no one liked the AAPL reference. But that's a fun trivia history.
Interesting. And so your first meeting was in 2008. Did you always have it in Vegas? And because I only started attending in 2013. So did you have an event in 2009, 10, 11, and 12?
Always, yeah. From 2008 on, we've always had an event. 2008 probably isn't credited by AAPL because it was more of a focus group. We turned it into like 2025 focus group. That was our actual first conference, we'll put in quotes, because there's only 20 people. We want to turn it more into a focus group to see what do we want this association to be. And then 2009 was our first conference. I think we had something like 116 attendees. Again, a good portion from California, just where my draw was. But the whole idea was how do we get people nationwide to understand, hey, there's this national association now. We want you to be part of it. And the first couple of years, people were like, well, why do I need to be part of this national thing? I live in Pennsylvania. I only loan in Pennsylvania. And at that time, people were just starting to lend regionally, right? Not even, of course, today it's 50-state lending, but back then it's like, well, why should I go to my state? I'm fine with my state. And then people started realizing, at least in California, historically, because there's a lot of, private lending was pretty sophisticated in California. You had a lot of people doing it. So the cost of capital was lower, not as low as it is today, but, call it 12% and 1 or 2 points. Then you go to your neighboring lovely state of Arizona, and their private lender is getting 14% and 4 points. And like, hey, this is nice. I'm getting paid more over here. Let me do more loans in Arizona. So, as they started getting the more regional focus, they expanded and saw, if you will, the differences. And then, almost fast forward to today, and we'll come back to where we're at, is you start seeing this national footprint, national presence, because they're able to leverage, the cost of capital, able to drive bargains down and get more deal flow. And that's where you're seeing a lot of competitiveness right now, is just for the supply of capital, as you know.
For me, it was kind of a turning point in my business because, I started officially my site privatelenderlink.com launched in 2010, but it didn't become a real business for about 3 years, and that's just because it took about 3 years before the site started ranking in Google searches. I didn't have a marketing budget at the time to go out and advertise. I didn't know if it was going to work. I didn't know, but then it started to work, and then I started looking up, hey, where can I meet private lenders? Because at the time I was just looking online and whichever lender had a website where they looked legitimate, even that, whether they said that they were a direct lender or not, who knows, right? So I always thought that the best way to vet lenders was to meet them in person. So I attended the APL conference in 2013, and it really, I think, was such a turning point in my business, because I kind of learned about how legitimate the space is, and saw the real people behind it, and met people from all over the country. So I always appreciated that conference, and I haven't missed any since that year.
Yeah, no, it's really amazing, isn't it? I still remember those years too. It was like Dodd-Frank was still being fleshed out back in 2012, 2013, right? You still had regs that were still being promulgated 5 years after these statutes came out. Some of them weren't even effective yet without those regulations. So it's crazy how things move slow in those early years, and as things have, if you will, snowballed, right? And as AAPL has found its niche as well, as really representing the industry itself, of getting up to 800 people, and how do you serve this industry in such a way that it makes sense to represent a nation? And I think you're starting to see also is like, no longer do we just have these state specific bills. You've got some larger federal bills aimed at lending too, and I think that's going to just happen as the space gets bigger.
Absolutely. And so you started this association. I think it was a brilliant move to do that. And, and it has been a really amazing conference, very well put together. I've made a lot of connections. I know a lot of other people have. I think at the time, the only other conference out there was the Pitbull conference. And it just had a totally different, persona, if you will. It was, you would look at the marketing materials, and you would just have a different impression of it. And I didn't attend only because of timing. It was just, I know they were in Vegas a lot of times. For me, the timing didn't work out. So it took me a while before I started attending those events. But there were only those two conferences. But now you've got all these other conferences that have been born out of these two organizations. Like you've got, your firm started a conference series. So now there's two conferences. And then out of Pitbull conference, Brett Alazawi started his own conference, NLE, or Leverage Con. And then Pitbull got sold, and now the National Private Lenders Association has their own conference series. Then Leonard Rosen's son, Matt, started his own conference, American Lending Conference. And, there are some of these conferences that have a little bit of focus on other sectors, but they're all primarily private lending. And I always thought it's amazing how all of these conferences are still successful. You've got essentially almost one a month. You could have probably 12 conferences in a year of just private lending, and it seems like they still do well enough to continue. Do you think it's just because people just keep going to more and more conferences, even people who are in our industry, they attend one and they feel the need to attend another, or is there just that many people out there who like going to these conferences?
I think a little bit of both, but I would say I would almost take a different tact on it, which is people go where they find value, right? And so there's something to be said about seeing the same people, even if you attend all the conferences, right? One, if you're going, you must see some value in it. You're not going to go where you're wasting time. If you don't get value, you won't attend. So I would say that as a threshold. And then the second thing is, think about, even in our space, or I would say any space, it takes time to develop relationships. Right. And so if you're seeing them on, if you will, a monthly basis, kind of like what you're saying is it better to see them on a monthly basis at these conferences and maybe accelerate that time frame to where now you make that relationship versus having to go to only see them twice or three times a year, or maybe even worse, having to go find, people drive to, LA or Vegas or Miami, wherever they're located, to have those separate meetings to accelerate that timeline as well. The thing I would say is maybe, especially if everybody's still attending all of these conferences, then one, they're getting value of it. And two, it's finally, these are the relationships you want to make everywhere. So if you're seeing all the people on a monthly basis and they get different value from the conferences, maybe there's a place for all of them, for sure. So
that's true also for me, because, there was a couple of years where I was attending every single conference out there, and a bunch of them I was sponsoring. So it was a big expense. It was a big effort, but it really helped to grow my business. And I really enjoy the conferences. I love meeting people in our space. A lot of them I already know. I like meeting new people, and yeah, to your point, I really enjoy going back, to all these conferences and in a different place. And even if it's a lot of the same people, for me, at least for my business, I enjoy it. Even if it's I see people that I'm not doing business with, or maybe I'll never do business with them. I always learn something from them. There's always some value there. But I always think about the lenders where they have an agenda of, hey, I need to get this much business out of it. And then you get other lenders that say, hey, I just want to learn. I just want to talk to people and see what they're seeing, and so everyone has certain things that they get out of these conferences. So, but I think they're all important. I just I just worry that people feel like there's too many of them. But at least it's good to have options, because then you could just pick and choose what works for your location preference or your time of the year.
Yeah, I was going to say that. Yeah, I think the people will speak, right? If there's too many conferences, you'll see people not going to some, right? And I think people go where they get value. If they stop getting value from somewhere, maybe they'll stop going to those conferences. But if you're still getting value from all of them, maybe it makes sense to go to all of them, or maybe select and choose. I definitely hear where you're coming from. It's like, oh, there's so many, but I also hear, I think Matt's is the newest conference line before I launched mine, right? And he's doing well. He's getting a lot of attendees there too. So it sounds like there's more than enough, if you will, attendees to go around to all the conferences. So I say let the people speak, and if you don't see value, I think they'll stop attending.
Yeah, and it seems like APL has grown to be the biggest one in our industry, and it's just one per year, and it's an interesting time of the year. It's a good time of the year because there's not as many other conferences in November, so that one's done well, and that's very consistent. And speaking of the APL, I didn't ask you this earlier, but you started it, but then I think at a certain time you had let it go. You sold it, and Mike Wren was the one that was leading it. And Mike Wren, for people who don't know, was the principal of NREG, the National Real Estate Investment Group, right? Or I'm sorry,
Yeah.
National Insurance. Yeah. Anyways, I don't know what it stands for, but yes.
That's a good question.
Right,
I don't
yeah.
want to say either because I may be unsure.
Yeah, okay.
I thought you were right the first time around. So
Sure. Yeah.
yeah, I've always had a piece of ownership, right? But I sold a majority of my ownership to Mike Wren. And that was actually a time, where, Mike Wren was running things, and at the time, I love where AAPL is now, but at the time, AAPL was going a different direction than where I thought it should go. And that's actually why, I hired Ruby, to be my marketing coordinator all the way back in 2014. And, we built the conference line for Geraci at that time because I saw something very different. I saw a vision that was different from AAPL. And I think if you've already got a sense of me, right, I'm going to wish everybody well and take the high road everywhere. It's just, when I see something where I want to create something, I'm going to create that vision. And so at the time, when he was running it, didn't go the way it was. But of course, now you got Eddie, Eddie Wilson, who he and I are owners of APL. And it's awesome to see where he's taken it. And with Linda, as president, she's done such an amazing job moving everything over there. It's in a path I think that was more true to my original vision. So it's awesome to see where AAPL is going. I cheer him on, and of course I'm still vice chairman of AAPL. So keep on working that one as well.
All right. And then with your role being vice chairman, how involved are you in AAPL? Are you do you look at stuff that's happening on a monthly basis, or do they just reach out to you when they need some advice or assistance?
Yeah, I have meetings. I help with shape the vision, of AAPL and where it's headed, where it's going. Another fun trivia is I created the original courses, the fund manager and the private lending associate for AAPL. And there's some stuff that they're working on in the background right now, that I'm hopefully, shaping the vision as well. So I don't want to, release that before they're ready. So I'll let them make those announcements when they're ready. But I think you'll see some new things coming out from AAPL, which is some pretty cool stuff. I hope I've had a small hand in, helping them shape that vision for that as well. So more helping them. Where is AAPL? What does it stand for? Where does it go? And where does it want to go as an organization?
And if you're okay disclosing this or talking about it, is Fortra Law going to continue to be general counsel for APL?
That I don't know. That's not my decision necessarily. I leave that to Linda, and we'll see where that goes. Yeah, I don't know whether that'll continue or not.
Okay, fair enough. And all right, and then let's talk about some of your other ventures that are non-private lending. So the first one that I heard that you started was Move, which was a virtual assistant service where you can let's say mainly I'm guessing most of your clients in that business are private lenders or they're in the real estate industry, right?
You
So
got it.
so the concept is from what I gather is that you want to outsource certain tasks or roles, and you have a team in the Philippines that are virtual assistants for your clients. Tell us a little bit more about that business and what made you start that.
You got it. Yeah. So it was definitely something that I started in Geraci, believe it or not. Embracing during COVID, this global workforce. We started in the Philippines, but actually I've expanded to about 3 or 4 other countries. There has to be a certain momentum and certain, if you will, infrastructure to make sense. But yeah, the question comes down to if you have a global workforce, why not embrace it? You have to be aware of cultural differences and some other things, but a lot of that stuff is trainable. And Philippines is great as are other countries. You look for a certain work ethic, of people, hardy work ethic that people are really driven by helping companies achieve their goals. And there's a delta, if you will, in the cost of living, right? So, you don't have to pay necessarily, huge wages, but, I want to be clear, is like you're still paying not only competitive wage, but a higher wage than they're able to get locally. So it's a win-win for the company as well as the global workforce training or talent, if you will. So yeah, I started that Geraci in 2020. Hired my first person there, Michael McVince. So he's still there, I believe, as a litigation, and just a great guy all around. And then the firm expanded. I think when I left, probably 30 people in the Philippines, serving various roles within the company. And then I took that to Stratus. Funny enough, Stratus actually embraced the global workforce talent, and I would say 20% of the workforce is onshore in the United States, and 80% is offshore. As a result, the trick comes down to what can you process and systematize that someone can follow, and if it could be predictable, 90% of the time, you could probably get someone outsourced to global talent to make that happen. So, some roles that we've been able to outsource pretty successfully are loan officer assistants, underwriting assistants, as well as developers, your web developers.
So you started hiring virtual assistants for your law firm, and then you got the idea to start Move to offer this to your clients and anyone else and any other business owners.
You got it. I had a few conversations with clients and like, well, how do you do that? It was like, yeah, and funny if I would just tell people, here's what you do. And they would say, gosh, that sounds like a lot of work. I don't know if I want to do it. I just looked puzzled. I was like, yeah, but if you invest some time and energy into it, you're going to save 50% off your labor. Doesn't that make sense for you? I was like, well, maybe. I was like, do you want to do it? I was like, I actually honestly didn't consider it at the time, but it was like, I had a couple people that once you plant a seed in my head, I've always been somebody who, if I see a need, I try to fill the need, right? As much as I can. And if you plant that seed in my head, I was like, all right, well, maybe there's a need here that we can fulfill. And that's actually why I launched Move 2 years ago. How do I fulfill these needs? And it's funny because I think I hinted at earlier. I don't see my law firm as independent from all my other companies. Like it's all makes sense together more or less, right? I take learnings and teachings from each company and apply them to all companies. And so with Move, for instance, is I see a need, or I see an ability to train people, on different aspects of private lending, right? So imagine they learn the mortgage softwares that we have, if they learn the accounting systems that we have, and what value can they add to our private lenders as a result. So it's to me, it's amazing, and I think we can save a lot of our private lenders a lot of money by hiring what we call movables, our movable people, and give them training and just again that win-win, making them more competitive to do more deals and loans.
And so you're sort of like a virtual assistant placement management company where if let's say I was a lender, I needed a virtual assistant, I would come to Move, and then you help me find the assistant, you manage them in terms of their personnel and whatever, manage they're the employee of Move, or the contractor, and then I just pay move, and then if I need a different assistant or another one, then I just go through you guys to.
You got it. That way, we take care of all the compliance with local laws and regulations. We train them to the extent we can. Obviously, people have their own ways of doing things, so we'll train them on their processes as well. We have something like 45 certifications we have of different roles. So they take our courses, and then we think they're at least basically trained to work with our clients at that point. So depending on what role they're being hired for, we'll make them take our certifications and then go from there.
Okay. And are there any other industries you've targeted outside of private lending?
Yeah, so legal space, of course, which I've done before, as well as we're open to almost all areas where it makes sense. But a lot of spaces that make sense is bookkeeping. So there's a dearth of bookkeepers, funny enough, out there. You even have accountants on the onshore that are having just difficult times finding accountants and bookkeepers onshore. So that's been an issue there, and something that we can solve by finding bookkeepers offshore and people who really understand that. Social media, another thing, where there's a delta. If it's very expensive to hire an onshore social media manager, but offshore makes a lot more sense. And so anything that we can train that touches a computer has been something that we can work with.
So primarily private lending, legal, and anything real estate related has kind of been your focus, I'm assuming.
You got
Right.
it.
Okay.
Yeah, but we have some collection companies that have used us a lot. There's process that stuff, and then we have a couple of marketing agencies that use us for social media managers and project managers as well.
Nice. And let's talk about your other venture, Stratus Financial. So this is a private lending for pilots that need to pay for their pilot school, right? Or
You got it.
flight school. How did you start that, and when did that start?
So it's funny, I just fall into things, as I like to say. So I was learning how to fly, playing during COVID. And my business partner there and friend, Brandon, he owned a flight school. And he's one I was training at in Riverside. And, I was working on my instrument rating, which is what you get right after private pilot. And I was talking with him and just hanging around the flight school. And you're seeing people, come and go, and you start to make relationships with people. The gentleman who was sitting dispatch, dispatch is the person who coordinates the planes coming in and out. He was working on instrument rating, and I was as well. So we were going on the same path. But he had his pilot's license for 3 years, and I just got my private pilot's license like the last month. And so I just asked him, it's like, hey, I hope you don't mind. I'm just nosy, if you will. It's like, what's taking you so long in getting your pilot's license? Is like, I'm doing this for fun. I can take any time whatsoever, but you're doing this for a career. Shouldn't you just move faster? I would think. What's the holdback for you? He said, well, I don't have any funding. And I was like, I don't understand. I was like, you don't know how to fill out a FAFSA form? Like, I did that for college. It's like, I was like, I could probably figure that out for you. And he looked at me like I'm an idiot, rightly so, because it didn't make any sense. It's like, there's no funding here, period. It's like, you're right, I don't understand. And so I started doing research. And, unless you're like a Title IV school, like at colleges or institutions, there's no federal funding for a lot of vocational schools, if you will, not just aviation, but any vocational school. There's no funding in there. So students are relegated, if you will, to private lenders. Kind of like we're talking about real estate, but private lenders for student loans. It's those private student loans. So I remember going in Brandon's office, and I was like, "Hey, man, he can't get funding. I don't understand. Don't you guys have funding?" He's like, "Yeah, I've been wanting to talk to you about that." It's like, I want to get student loans for my school. It's like, I want to get funding and stuff like that. So I go back and do some research, and just realize, like, even back then, this was 2020, I want to say, and the total addressable market was $4 billion. I'm like, this is a lot bigger than one school. This is huge. So, started, with my own funds, and we came out with a few products. And like any great business owner, right? Those first few products we were laughed at and canceled. So the first product that was so amazing was a 5-year fully AM student loan. I was like, I don't understand. It's perfect. Investors will love this. They get paid off in 5 years. Of course, the payments were $4,000 a month. So you can imagine students aren't paying $4,000 a month for any student loan. They look at you like you're an idiot. It's like, oh gosh, well, that didn't work out so well. And went back to the drawing board, right? And try to figure out what makes sense on both the investor and borrower side. So of course, longer term had to happen. So, right now Stratus does 10 or 15-year notes and, amortizes those loans, those payments so that they're more affordable, especially in the aviation space.
So you mentioned earlier that you started a fund, right? Is that typically how the loans are funded? It's just balance sheet, or is there a secondary market for these?
We're creating the secondary market. There's not really a secondary market right now, so I consider it what private lending was in 2010, right? They're trying to get attention to it. So we're very much balance sheeting these loans right now. We have a couple forward flows, but a lot of these are definitely held in our funds. Our investors aren't complaining, given the nice returns right now, 16% plus. So they're pretty happy with that. And then we pair it just with debt, that keeps that weighted average down. But those three funds are definitely balance sheeting the loans. And then, our goal is to figure out, well, do we forward flow? Do we securitize? How do we get our next partner, if you will? And that's what, currently as of today, right? We've got about 75 million in loans we've done. Our goal is to grow this to 200 million and keep on growing it from there. And how do we get the funds, if you will, to pair up with our origination platform?
Nice. And what are the typical amounts that students need to fund their or to pay for their pilot school?
A lot smaller than the private lending loans, about $100,000 on average. Our average loan is actually just smaller, lower than that, about $90,000.
Okay. All right. That sounds good. And then do you have any plans to get into any other sectors as far as starting your own finance company?
Not right now. I guess I never want to pigeonhole myself. As you can see, I say yes to a lot of things, but nothing on the drawing board. I promise. Right now, my next move really is just doubling down in the private lending space and how do I continue to add value. So, I don't see any new things on the horizon, but I don't also say no. If there's something that really makes sense to solve a problem, my clients or any other space, I'd gladly say yes.
All right. Sounds great. All right, Anthony, that's all I had on my list for today. Was there anything else you wanted to chat about or anything I missed?
No, I love it. As I said, it's funny. I don't think I've actually come on a podcast before and talked a lot about this stuff, like AAPL and all this stuff and all the fun stuff. So I've really enjoyed this. It's one. It's been fun to talk about. Then also, a trip down memory lane on a lot of respects, and just excited for the future and where private lending is growing and going. For me, I still think it's in its infancy. I think 10 years from now is going to be completely different where it is today. Even more institutionalized. I don't think that train is sailing anytime soon. You're going to keep on seeing that going, and I think we're going to see a lot more sophistication, as well as a lot more people really finding their own niche within the space. What do they want to be, and where do they want to go? And securitization isn't for everybody. They'll be very happy balance sheet lending, and that's all they want to do, make a good return for the next 20 years and call it a day. So, our goal is just to be a part of it and just be part of the ecosystem.
All right. Looking forward to seeing you grow that business and looking forward to seeing you at your conference upcoming and all the other conferences out there that you might be attending.
I look forward to it.
All right.
I'll see you there.
All right, Anthony. Thanks for your time. And that's a wrap for this episode. Visit Geraci's website to learn more about their legal services. The website URL is geracillp.com. I put a link to that in the description, along with the websites for his Move business and Stratus Financial. Visit their websites, learn about them, reach out. Please mention that you heard about them from LenderLink and the Private Lending Insights podcast. I hope you found this episode to be insightful. Thank you for tuning in and listening all the way to the end.